So in this video, we'll be discussing how to invest in stocks for the long term. And in particular, I'll be discussing how you can use something like systematic investment plan in particular sector stocks to create wealth over a longer period of time. Now, please note that detailed stock selection based on relative strength, based on key fundamental data points, I've already covered in great detail. I won't repeat those concepts. So please check this card here. This is where I have linked up all the videos. I've also mentioned the links in the description box below and in the comment section below. One more key point, 95% people who are watching this video won't watch this till the end, because what I'm going to explain here does not relate to short-term trading, does not relate to BTST, where most of the people are interested in. But 5% of you who will watch this video till the end, let me assure you, your overall thought process with respect to downtrend, with respect to economic corrections will change for good. And I'll show you how you can use simple systematic investment plan to create long-term wealth in the market. Now, before we start getting into the details of process, let me tell you that I always recommend investors and traders to begin with something like systematic investment plan. Now, this is very famous in mutual funds, but I think in stocks, SIP works much better because here you are researching individually on your experiences for any given sector, and within that sector, you choose out stocks. So I think SIP is something you should really look into. My thought process when it comes to SIP is that I always assume that once I start investing, stock will correct by 30 to 50%. So mentally, I am prepared to see sharp pullbacks in the stock. The second point that why I prefer systematic investments is because, the effect of volatility reduces a great deal over a period of time. So let us assume that you bought HDFC Bank here somewhere at 1300. Most brokerage houses had buy rating for the stock here. You would have simply seen your investment fall something like 40% over the next 2 to 3 months. And let me tell you, no matter how much research you do on a stock, if your investment fall 40% over 2-3 months, you will exit that. So having said this, the third point why I prefer systematic investments is because you don't have to focus too much on timing, and you can take advantage of volatility. Now, taking the same example forward, let's say I began systematically investing in HDFC Bank when it was at 1300. I would have periodically invested as the markets were moving lower. So I would have taken advantage of the price moving lower with volatility. And this in turn is called rupee cost averaging. In case you're watching this in the US or UK, it is called dollar cost averaging concept. Now, this is where, for retail traders, something like systematic investment is really helpful because we can take advantage of all this volatility here and still be investing systematically in the stock that we have selected for the long term. And as price again starts moving higher, these investments will eventually start paying off. Now, I will explain the details of how I do it when I start allocating money and how I increase my position as the stock is moving lower. These details we will discuss in the subsequent slides.
Click on the subscribe button and bell icon to get instantly notified when a new video is uploaded. Thank you for subscribing.
So a couple of more advantage of SIP is that when a company declares something like a dividend, bonus, or even company splits, then you can take advantage because you are investing for the long term. And another short-term advantage that I see is that now I am recording this video on Sunday. US presidential election is due over the next 2 to 3 days. So short-term events impact on the market. Now this greatly gets neutralized because you are investing for the long term, and therefore any short-term volatility you will again use to accumulate more, and hence that will give you a better rupee or dollar cost averaging. So this is one more way I look at it psychologically. You require a different sort of mindset when it comes to systematic investment, and this is what I've tried to highlight in this particular section. So the first step is to look at the sector chart. I like to see what the sector is doing, and this has to be a main sector of the economy, something like banking and financial services, pharma sector, IT sector, and so on and so forth. Now the thing is, in December 2020, when banking sector was somewhere around 32,000, again, most of the brokerage houses were giving a buy recommendation. So as the banking sector fell to something like 16,000, 17,000, it's really strange to see that it is during these times that most of the research houses are now telling that asset performance is not that great. Now, due to COVID, the moratorium issue will come up and banking sector will not perform as well as it did in the previous cycle. Now, my take on this is a bit different because when the entire market, entire street starts betting against a sector, that is when I start to look into investment opportunities. And that is why this entire video is about investing in the banking sector. And I will be telling you which stocks I am choosing for a long-term investment point of view. Again, I have to make a standard SEBI disclaimer. This is not an investing trading advice, and I'm not a SEBI registered investment advisor. So the first thing I like to see is the recent price action. Now, if you look at this particular range, this is where price started bottoming out, and then Bank Nifty started moving higher here. The sharp pullback that you have seen, again, this is very near to the top end range of the breakout that happened here in month of July, August. So this entire region was some sort of pullback consolidation happening, and then again price has now started moving higher. Now, if you've seen my recent videos on Bank Nifty, you would know that I am relatively bullish on the entire sector. I'm not looking to short sell or liquidate my positions. I do feel that banking sector will undergo some sort of sideways movement, and then we'll again start moving higher. Now keep this thing in mind that because I am investing systematically, it does not matter if banking sector again goes down to something like 18,000, 19,000, or even for that matter 17,000, because this is where as a systematic investor this would actually play out in my favor, because I will keep increasing allocations in this sector and will then again wait for an uptrend to emerge in banking sector. And banking sector, especially in our economy, is one of the main drivers of growth, and therefore irrespective of which level this sector comes down to, eventually over a period of years this will again move higher. And this is why you require a different mindset when it comes to long-term investing. In long-term investing, if you start investing at this point, you need to be mentally prepared to see your investments underperform for a substantial amount of time, and then as things start to improve, you will see returns. Now, when the stock or the index is falling, this is where you place systematic investments so that when the cycle turns again, you will reap benefits of it. Now, for those of you who are channel members, please note that tomorrow 9 p.m. the third part of pullback trading will come out. So please keep your notifications on. This is where we will discuss what sort of pullback we should focus upon and what are the ideal stocks for these setups. And for those of you who are not channel members, you can just become a member for 1 month, watch all these 2025 videos, and then cancel your membership for the subsequent months. Now, for those of you who are not active stock pickers, you can look into ETFs to invest into something like Nifty Bank or even something like Nifty 50. Now, these ETFs are also available in the market, so you can look into it for broader participation in a sector. So the first step is to look into the broad term sector trend. And the second step is to look for sector leaders. Now, when I'm looking to invest in a sector, I am looking to invest in the top 2 to 3 stocks, that is on a systematic basis. When you're looking to invest in a sector, always go for sector leaders. The main reason being, and this will mainly be large cap stocks. The main reason why in small cap and mid cap stocks, SIB does not work that well is because when you see such sharp movements on downside, that is in a small cap or mid cap stocks, most of the investors are stuck as stocks start moving lower. So when the retracement on the upside again comes about, all these investors who are stuck, they start exiting their position. That is why a systematic investment approach does not work that well in mid cap and small cap stocks. You always need to go behind market cap leaders that are in terms of large cap companies that are doing really well and that move well with economy. So keep this important point in mind, because I see a lot of investors making this mistake of selecting something like small cap and mid cap stocks for systematic investments. It does not work always. Whereas in large cap stocks, your success rate will be much higher. So currently I already have systematic investment plan in the banking sector, and my main stocks are HDFC Bank, ICICI Bank, and Kotak Bank. Now these are the 3 stocks that are sector leaders, and therefore I have chosen these for systematic investments for a long-term point of view. Yes, there are some other good banks also. Axis Bank is a very good bank. IndusInd Bank is a dark horse. It's a good bank. State Bank of India is the largest public sector bank. So these banks are also good. But because I want a much focused approach, I will choose only these 3 stocks, that is HDFC Bank, Kotak Bank, and ICICI Bank. And I'll now systematically begin investing as time progresses. So when the markets were falling in March, April, May, I was actually making systematic bets in Bank Nifty ETF and I was also making investments in HDFC, Kotak and ICICI. The reason why I am now continuing with those investments is because point number one, if you look at the recent mutual fund data, not many funds are buying into banking sector. So this is something that I like to see. I like to start my systematic investments when the street is not focusing on the sector as such. And second point, if you also take a look at delivery volumes in banking sector, delivery volumes are still on the lower side. So it is not that I am increasing my investments in a time when everything is moving higher. In fact, if you look at news flow, most of the news agencies or research analysts are having immense concern about asset quality and are expecting some sort of underperformance from banking sector. So these are the times when you should be making systematic investments, because even if bank nifty starts falling to these levels, you can plan out your investments and then take advantage when the sector uptrend begins. So let me now discuss a few things about how I build my positions. I'll just take up example of Kotak Bank here. So currently Kotak is trading at 1547, and let me assume that after this breakout here that has happened, I have started accumulating the stock. All right. So the first thing I like to do, and this will differ from each person, but you can just get a rough idea. So let me assume that my monthly income is something like 1 lakh. All right. So what I personally do is I then take 10% of my monthly income and then I spread it out across my systematic investments. So 10% of 1 lakh would be 10,000. And if I have 5 stocks where I want to invest systematically, then each stock gets 2,000 rupees. Now that is how I like to structure things. At any given point of time, I only have 5 to 8 stocks where I am investing on a systematic basis. Please remember, my positional trading portfolio is completely different. My swing trading portfolio is completely different. And even my day trading and short-term trading portfolio is completely different. It is just that now, since most of you are full-time working professionals, you are not into stock market on a full-time basis. So your entire portfolio here can be allocated to long-term investments only. So before we move forward, an important announcement. These are the only 2 channels that are associated with our YouTube channel. Please be aware of all the fake Telegram channels that are using name very similar to ours. And please check the spelling before joining the Telegram channels. Now, before we move forward, let me tell you that most of the participants in stock market are extremely short-sighted. Now, when I say short-sighted, I mean they want to buy here, exit here, or they want to short here, exit here, or again, they'll buy here, exit here. These are the kind of approaches 95% traders or investors take in stock market. Now, this is completely wrong. Yes, trading is also important if you can find the time to do it and if you get better over a period of time. But in case you don't know trading, then investments is something that you should be looking into seriously. And investment means once you identify a good stock in a good sector, if you buy here, you should not be exiting here. Of course, I'll come to that in a later stage, how to review your investments on a consistent basis. But if you have shortlisted a company and the company is doing well, in the short term, if the economy is not doing well and the sector is not doing well, then systematic investments is your best friend in the market. Now, this is what will help you take advantage of the volatility. And when the economy improves and when the sector again starts doing well, and even if your company is doing well, this is when you will start making staggering returns on your investment. So this is the overall premise, that you need to identify a good company. It's not that difficult, especially if you're looking into large cap space. And then you need to systematically invest. You need to find out what is your income, what is your expense, and how much money you can invest on a consistent basis. So SIP is all about making small investments, but on a consistent basis. Now, if you come to the stocks that I mentioned, those are HDFC Bank, Kotak Bank, and ICICI Bank, then these banks are the best in terms of these 5 parameters that I've selected. So I like to look at return on equity. I like to look at return on capital employed, net interest margin, whatever income bank is getting, the CASA deposits, and the bad assets in a bank, or they are also called as non-performing assets. So these are the 5 parameters that I track in the banking sector, and those are only with respect to systematic investment plan. Now, every quarter I do review this to check whether these 3 stocks are still the best stocks in the banking sector or not. And then based on the feedback, I then make some changes in the overall SIP structure. But in general, when it comes to just the banking sector, these are the only 5 parameters that I'm tracking. As I do more videos on various sectors, I will be giving out the important data points. And let me tell you, all of this information is free on a website called screener.in. In case you are in the US markets, you can use something like eSignal. Now you will get all the data on these 2 websites. There's also a website called as Finviz. You will get all these details over there. So let me now explain how I build positions. So I'll assume that at 1183, that is current market price, I'll begin my systematic investments. So the first step will be to mark out initial stop loss level where I will review the entire investment. So HDFC Bank has given a nice breakout above 1150. So my stop loss would be somewhere below the 1000 level. This is where I will review the overall investment. And till the point 1000 is not violated, I'll keep investing. Again, I'll assume 10,000 rupees every month. This is based on income. This is based on your expenditure and how much you can commit on a consistent basis. So this amount will vary depending upon whether you're a student, whether you are a full-time working professional, or you're in your mid-40s, mid-50s. This amount will be different for every person. So these are the first 3 things that I would like to look into. And let us now talk a few things about scaling in. Again, that will be dependent on your risk profile, but I'll just explain a few things. So at 1183, my first set of installment will go, that is 10,000 rupees every month. So let's assume stock falls another 10%. It will be down to something like 1080. This is where I'll commit another 10,000. So what I usually do is that at every 10% correction, I start allocating more and more money in the stock. So at 1000 rupees at this particular level, let's say I review the stock, the trend is up, financial performance is good, the banking sector trend is not that great, economy is not doing that well, I'll still continue with my investment. So at about 1000, let's assume I have invested over the last 5 months, my total investment would be about 50,000. So if I find that the company is still good, the overall price trend is still good, what I do is that I double up my investment. So I would be having an average of 1183, then 1083, then something like 1050, and then 1000. So that is where I would have committed my complete amount of 50,000. And then at 1000 rupees, when the review stage comes in, if I feel the company is still doing well, I'll together commit another 50,000 rupees. So what I'm essentially doing, I'll just remove this marking here. So what I'm essentially doing is that as the stock price keeps moving lower, I am making systematic investments at each stage. And when the price comes very close to my stop loss level, or it even violates it, I then reassess the company. And if I find nothing is wrong, the entire investment that I've made during this stage, I double it up at this particular point. Now, there are 2 important things that you have to note here. When I am doubling my position here, I am not averaging down on my losses. This averaging down concept is more relevant in short-term trading and something like swing trading. And in trading, you should never average down losing positions. But when it comes to systematic investments, remember, at each stage, you are making systematic investments in a stock that you feel will do really well over the next 5 to 10 years. And that is where you are using short-term corrections, short-term volatility to scale in further and then assess the company on a periodic basis. I will come to those 5 steps at a later stage, but please understand this concept. This is not averaging down. This is actually making more systematic bets on your long-term stocks that you have identified that will do well with the overall economy. And this is where I hope you have understood why this will work only well on large cap sector leaders. Don't try this on mid cap, small cap stocks. It just won't work because those are not leaders in the market. These will only work on sector leaders, something like Apple, Netflix, Reliance, Larsen & Toubro, TCS, Infosys, HDFC Bank, Kotak Bank. These are the sort of stocks for which these methods are more suitable. So these are the 5-step process that I always follow on a consistent basis. The first step I've already shown you. It is about sectors, it is about stocks, then about deciding your systematic investment amount, and that keeps going on as the stock goes up or it goes down. The second step is also to first mark out your initial stop loss level, like I just showed you in the previous chart of HDFC Bank, and then you need to assess the trend on a periodic basis. I do this on a weekly time frame chart. That is, every week I assess what the price is doing. I like to stay in touch in terms of overall price performance. Now, as company comes out with results every quarter, I again like to review the performance. I like to look at return on equity, return on capital employed, how the asset quality has improved or it has worsened. These are some data points that I keep checking. And in case the stock is doing well or the stock is near the stop loss level, I then review the complete performance and then decide whether I have to continue or pause my investment. Now, the key word is pause. I am not talking about exiting. And this is again one of the most wonderful things that you can see. You have advantage in terms of a systematic investment plan where you don't have to exit anything. You can just pause your investments, reassess your overall portfolio, and then decide whether you need to continue or you will reallocate that money to some other stock. Now, when it comes to short-term trading in FNO segment, you always have to decide two things. Number one, whether you should buy, and number two, whether you should exit. But that is not the case with SIP. You can take your time, you can pause your investment, review your investment, and then based on your needs, your overall portfolio performance, you can then decide whether you need to continue, whether you need to reallocate, or in case you feel the business or the stock is still doing well, you can again move forward and restart your SIP. So these are some of the main advantages that retail traders have in terms of systematic investment. And let me tell you, there are not many videos, not many books that talk about all this because this is boring. And people are very interested in short-term trading. They are very interested in something like swing trading and something like BTST, buy today, sell tomorrow. You're missing out on the main advantages of stock market, that is placing systematic bets and then seeing your investments grow over a period of time. So these are very basic steps that everyone can follow. Just look for a sector trend, make sure that there is some sort of uptrend visible, look at leaders within that sector, and let me tell you, always confirm whether the top 3 stocks in the sector are showing same price movement. So take a look at chart of HDFC Bank, take a look at a chart at ICICI Bank and Kotak Bank. All of these are having similar structure. It just tells you, this is also known as sister stock concept, where stocks from the same sector start moving in the same direction. So always make sure this is in place. That is when you can increase your odds of making returns over a longer period of time. So I'll just pull up this one example. This is chart of Larsen & Toubro, LNT. It's again a sector leader. So I started making investments in Larsen & Toubro, that is systematic investment at this level. My first investment I think was at 1100. And as of today, that is November 2020, I'm not making any significant return on the stock. But what I've done is I have used this period to accumulate. Again, when the stock was somewhere here, I doubled my investment. And over a period of time, again, I have made investments. Now, this was a phase where LNT fell in the early part of the year from 1500 to 800, almost a drop of about 45%. Again, I have made systematic investments here. So as I'm making systematic investments, because I'm here for the long term, I'm looking to invest for the next 5 to 10 years. I'm just not bothered about what is going on here or what was going on here. This is one more benefit of SIP. It is so easy on overall psychology. You don't have to check your investments every day in, day out, and you can just invest small amount of money as stock keeps moving lower. Now, when stock is moving high, obviously the amount cannot be equal. It has to be a little bit less because you don't want to average up. In terms of SIP, if you're sure about a company performance, something like sector leaders which will do well in coming years, you should always try to get a better average price on the way down. So that is an approach that I follow. It's easy on psychology. I hope this particular video has helped you see the benefit of making systematic investments in market. Just make sure it is a large cap stock. Make sure it is a sector leader. Make sure there is no huge amount of debt visible on the balance sheet, because these are the few things that you have to keep in mind. And I've covered some key fundamental data points in many positional trading videos I've done. Just go through it. That will be really helpful to you. And in terms of price action trading, price action analysis, I've done a whole series of about 30 odd videos that I'll link it up in the description box and in the comment section and also in the cards here. So thanks a lot for watching this video, guys. Kindly consider hitting the like button if you find the content useful. Take care and be safe.